Hi everyone, thanks for joining us at our Globility Group webinar on Destination Australia, where we'll be covering investor immigration as well as tax and investment options for Hong Kong residents. Joining me today is Grace Bacon from ANZ Bank, as well as Alison Wood from Pitcher Partners. Both Grace and Alison will be joining me in walking you through a broad range of areas covering immigration, investment, as well as tax planning issues specifically relevant for Hong Kong nationals. If I might just take a few minutes to introduce everyone to what we'll be talking about today. We have quite a bit of area to cover. First of all, I'll be introducing why we're calling this Destination Australia and some of the issues that are bubbling away around moving cross-border, particularly from Hong Kong to Australia. It's a timely running of this webinar because the Australian government is now both making significant concessions for Hong Kong nationals in attracting them to Australia, but also we expect cross-border movement to open up in the coming weeks and months, and particularly in the early stages of calendar year 2021, when we expect and hope that a COVID-19 vaccine will be widely available, which will allow us to get back to some semblance of normality. First of all, Grace will be spending 20 or so minutes discussing the investment environment, where Grace will walk you through exactly what your investment journey might be in moving from Hong Kong to Australia, as well as some of the issues that we know from our collective experience are important in moving both yourself or your wider family to reside in Australia long term. I'll then spend 20 or so minutes speaking about the immigration environment, importantly some of the recent government announcements that have been made in support of Hong Kong residents, and some of the immigration options that I believe are most relevant to Hong Kong nationals. There's a myriad of immigration options available, and time will just not allow me to go into too much detail, but I will touch on those areas of immigration that I think are most relevant to Hong Kong investors, entrepreneurs and business leaders. And then I'll cover briefly the current processing environment, which is a bit of a changeable one and working in a particularly volatile environment, and I'll try and give as much certainty as I possibly can in that process as well. We'll then hand over to Alison to discuss the taxation environment. The taxation framework in Australia is a complex one, and we're fortunate to have Alison with us to walk us through the complexity of that environment, as well as some of the planning issues to consider. And we know that many of you who would be looking to relocate to Australia are doing so with a view to permanent residence. So Alison will touch on some of the tax planning issues that are relevant there. And then finally, if time permits, we will raise some unique destination issues to consider that lie around the peripheral of the areas of investment, immigration and taxation. If anyone has any questions, please feel free to put those questions in the chat box, and we'll try and respond to those as quickly as possible. If time doesn't allow us to respond to you, please don't worry. We'll make sure that we will respond to you separately after the event with any questions you may have. So with that, let me introduce what Destination Australia is. I'm sure I speak for everyone when I say that we can't wait to see the back of COVID-19. We've learnt a lot over the last 8 or 9 months that we've been living with the global pandemic, and some of those areas I've touched on here. What we have seen is a significant spike in invest immigration worldwide. Clearly, in spite of the border restrictions that exist, governments worldwide see great merit and value in attracting successful business entrepreneurs or successful investors to their country because they have a track record of creating employment and creating economic growth. And that's why investors are such a high level of interest, not only just for Australia, but for other locations as well. And that's translated to a very big spike in invest immigration interest worldwide. COVID has clearly exacerbated skill shortages in certain areas and industries. And the popular view you may have heard is that with the repatriation of a lot of skilled local nationals to Australia, for example, that it's resulted in a diminished need for skills for qualified foreign nationals. Well, actually, nothing could be further from the truth. Many employers and many governments are falling over themselves to attract skills that we know are in short supply, and the Australian government's no different to that. So we'll touch on some of those skill shortage areas and the industries in which they lie, because there are certain advantages that that flow from those policy settings. And on that, governments are continually refining their immigration policy settings to ensure that the post-COVID priorities are addressed. If there's one thing that we can all be certain about following the re-emergence of open borders, is that governments are going to slavishly pursue economic growth. The amount of government stimulus and therefore consequential government debt that's resulted from support worldwide is of historical levels. And governments, particularly at a time at historically low interest rates, see the best opportunity to eat away as much as possible in that debt is to pursue growth. And the biggest opportunity to pursue growth is to bring talent to local economies to generate direct and indirect economic growth and employment opportunities. There's clearly been geopolitical driven change, and that's particularly relevant in the Asia Pacific region. Now, that's going to impact the movement of talent across our region. It will come as no surprise that with the onset of the pandemic and with the consequential unreliability of supply chains in certain critical areas, particularly related to healthcare, governments are now looking to either repatriate certain areas of critical manufacturing or repatriate certain areas of skills that were otherwise offshore to key locations worldwide. Now, that's going to result in an enormous recasting of talent hubs across the region. That's particularly relevant for Hong Kong, because Hong Kong has an abundance of talent which globally, particularly Western developed governments, are eagerly pursuing. And Australia is no different to locations like the UK, the United States and Canada, who are really aggressively designing cross-border immigration and in many cases tax policies to attract and incentivize Hong Kong talent and investors to move from Hong Kong to a number of different locations. And in that regard, the Australian government's established a task force that will aggressively go after, one, identifying key talent, and converting that key talent to make a decision to choose Australia as its location, as the location of choice. Because particularly highly qualified investors, successful investors and entrepreneurs in Hong Kong do have an abundance of choice of where they might go to forge the future for themselves and their family. So Australia needs to be really, in a policy sense, competing very hard to make sure it gathers its unfair share of that talent. And in that regard, the Australian government is developing incentives to attract particularly export-oriented Hong Kong-based businesses to relocate to Australia. Unfortunately, at the moment, we don't have a great deal of detail on those particular initiatives, but I would expect even within the next several weeks, we're likely to see a lot more detail around that policy setting from the Australian government materialise. And then once cross-border movement starts to open up, I'm sure that if anything, there'll be an oversubscription of foreign talent to fill what inevitably will be a finite number of places in Australia. Now, for Hong Kong investors, Australia has some unique advantages that I often call hardwired to Australia's advantage. And I've listed a few of those there. And I know during this presentation, Grace in particular will be going through some of those hardwired advantages. But some of them include a very strong, stable and regulatory framework. And that's particularly relevant when it comes to taxation, legal and investment. There is some pain when it comes to particular areas like taxation in Australia, but there's very rarely ever any surprises. And for successful business people or investors, I think more so now than ever, it's that stability and lack of surprise that is incredibly attractive. Australia has a world-class education sector, and with the closure of Australian borders, particularly to overseas students, it hasn't diminished the quality of that education sector, but it's increased the attractiveness of the education sector to really make a very attractive pitch to students to choose Australia for their further education. Importantly, Australia has one of the most, a world-class, frankly, health sector. And I think it's no surprise, certainly to Alison, Grace, or myself, all of us live and work in Australia and have done so for many years, that Australia has fared incredibly well when it comes to the response to COVID. We have one of the lowest infection and certainly by world standards, one of the very lowest mortality rates arising from COVID-19. And that's directly as a result of the high quality health sector that Australia enjoys. Importantly, and this is particularly relevant, I would dare say, for Hong Kong at the moment, is that Australia has a very stable political environment. And often when we talk about immigration, when we talk about investment, when we talk about tax, the politics of the day often have a direct bearing on those critical areas of decision for investors and business entrepreneurs. So it's incredibly important, and I don't want to underestimate the importance of having a stable political environment in making a decision about which country you choose to live. So with that as a background, that hopefully gives you more of a background around what Destination Australia means to us and gives you a context of what we'll be talking about next. So with that, I'm going to hand over to Grace Bacon from ANZ. Grace?
Thank you, Mark. Hi, everyone. Good afternoon. Thank you, Mark, for that warm introduction and some really great insights to what's happening in the Australian migration environment. Hopefully at the end of today's session, you'll be equipped with some useful information that will help you with a migration journey to Australia. Before we begin, Mark will play a video to introduce ANZ Private.
Welcome to Australia, land of sun, beauty and world-class healthcare. This is a country rich in opportunities. It can take courage, resilience and a support network to become established in Australia. A support network with ANZ Private, as we understand the complexities of moving countries and the importance of establishing a strong foundation for you and your family. We can support you before, during and after your arrival in Australia and assign a dedicated ANZ Private banker who can assist you as you structure your finances, purchase your new home and settle in Australia. When you're ready to set up business or consider investments, ANZ Private can connect you to professional networks and supporting communities that can help your interests. But that's not all. You see, behind every ANZ Private banker stands a team of professionals ready to provide the market insights and advice you may need to both manage and grow your wealth. If you want a strong financial and personal foothold in Australia, talk to our dedicated multilingual team with the experience in helping people move to and settle in Australia. Talk to ANZ Private.
Thank you, Mark. Hope everyone got a taste of, as Mark said, you know, a lot of people do move to Australia for the lifestyle, for the healthcare system and for our education system as well. And no doubt some of the images you've seen on the video would actually relate to that. So the topics I'll cover today is an introduction to who we are, ANZ Private. I'll also talk about some topics that we have found our clients ask us and are important to understand before coming to Australia as part of your migration process. And then finally, I'll touch on the investment solutions that we offer for complying investments that may be required for migrating to Australia, depending on the visa class that you would apply for. So just over to the next page, please, Mark. So as the video said, we absolutely believe that at ANZ Private, that it takes courage and a strong network to thrive in a new country like Australia. Having a specialist local team that can support and advise you throughout your journey is really important. My team and I are very passionate about helping clients and particularly migrants come to Australia, as we were all once migrants ourselves. We have made Australia a fulfilling and successful journey for us all. So just over to the next slide, Mark. Yep. So you may not have heard of ANZ Bank. ANZ Bank is one of Australia's 4 largest big banks. It has over 180-year trading history, and it's rated AA under S&P as well as Finch. It's also rated as among the world's 25 largest listed banks, and we have a presence in 32 markets globally, particularly in the Asia Pacific region. Last year, ANZ Private Bank was voted #1 private bank in the region in 2019 and 2018. We're really proud of this award by Euromoney, and in actual fact, the international team was also awarded #2 in Australia for international banking services. So just around to the next slide, please, Mark, is the way we work with our clients, particularly when you are coming to a new country. Everything that you have known before would be quite new to you because you're in a new environment, new banking environment, new legislative environment, but also new lifestyle as well. So at ANZ Private, we strive to be an extension of your family sphere to help you work through the financial journey as well as your migration journey. At the heart of it, you have an assigned dedicated private banker who will actually handhold you and provide you advice and insights along the way. Just further to the next slide, Mark. So we actually look at understanding your migration journey into mainly 5 5 parts. Sometimes from a financial perspective, you may need to start thinking about some financial decisions well before you arrive in the country and well before you actually get your visa as well, because it may involve needing to open bank accounts, setting yourself up and setting up a financial foundation before you actually arrive. Once you arrive, we also looked at helping you establish yourself in Australia. As part of our private banking services, we offer advice, not just on the financial perspective, but we provide you with some guidance around what type of schools should you be looking at, where you would be looking to settle your home, and all the general lifestyle issues that we would also assist our clients with. And along the way, as you settle in Australia, as you become a permanent resident, there's lots of other tax and legal issues that you may need to be aware of. And that's why we partner with the likes of Alison from Pitcher Partners and Mark to help you with that migration journey. So to the next slide, Mark. So how we do this is that we focus on your needs and we tailor advice and provide you with solutions that is tailored to individual family needs. Every family have different needs, and we look to help you invest and protect, and if necessary, help you with getting access to funds, and also provide you with a longer term financial plan as you settle in Australia. In the next section, I'm going to move into talking about some of the 4 areas that you may be interested in and understanding before you think about settling in Australia. The areas I will cover today would be talking about the automatic exchange of information. I'll give a brief overview of the Australian property market, particularly around with what's happened with COVID-19. The Australian medical coverage system, and also touch on the Australian education system. These areas we find a lot of our clients ask us about as they are looking to settle in Australia. So with the common reporting standards, or sometimes is known as the automatic exchange of information, Australia has actually entered into the global standards for automatic exchange information back in 2000, and from 2017, so that was 3 years ago, Australian financial institutions, including ANZ, is required by law to collect tax information to return to the Australian Tax Office, and in return, the Australian Tax Office would use that information to exchange with the Hong Kong Inland Revenue. So as a Hong Kong resident coming to Australia, regardless of which financial institution you are going to set up your accounts, you'll be required to provide your TIN, your tax information number, in order even before accounts can be opened. And each year, the banks will be required to provide that reporting back to the tax office and subsequently back to Hong Kong. So this is something that you probably need to be aware of, and I'm sure, particularly for people in Hong Kong, you're very familiar with this requirement. So from a bank perspective, we are required to collect that information, and then from a client's perspective, you're obliged to disclose that information to us. The next slide, I'll just touch briefly on the Australian property market and what's happened during COVID-19, because a lot of people, as part of one of their first needs when they come to Australia is thinking about where would they live and where would they settle their families. Due to COVID-19, property values across our major cities have been relatively stable, and although there's been a reduction in market activity. So in terms of sales and properties being put on the market, there's been a bit of a reduction in activity. What we've also found, particularly in the major cities, inner and middle suburb values have shown very little impact by COVID-19. So it hasn't really dropped too much, and it also hasn't increased too much. However, resale of apartments and new apartments have slowed because investors have been concerned about the vacancy rates and lower rental values as well. And in fact, the residential market, particularly the apartment markets, have also been impacted by the decline of international students. Due to the travel bans, we haven't seen our international students return this year, and they're unlikely to return until travel bans are lifted. And there's also concerns in the short term about the lower migration numbers, particularly in the short term. But we also understand there is quite a large pipeline at the moment with the Department of Immigration of applications that needs to be processed. The other thing, as a new migrant to Australia, one of the things that you probably need to be aware of is some of the state governments have started to charge higher stamp duties for foreign investors or foreigners that are purchasing properties in the major cities. So something to consider, and we also recommend, sometimes we ask our migrants to consider even renting in the short term to get a feel of the area that you want to settle in before you commit to buying a property. If you're looking to purchase house and land, and then particularly for people coming from Hong Kong, you might find that quite attractive given the space that we have here. But what we found in Sydney and Melbourne, particularly the house and land market, that has experienced a lot of growth in the last 3 or 4 years. Values have subdued somewhat recently, but we also expect that over the longer term, the capital growth with house and land type assets will be around about 5% per annum. That's excluding rental income. The other thing to consider is when you're buying house and land, particularly any assets with land, as a temporary resident or as a foreign investor, you may be subject to Foreign Investment Review Board approvals. So before you commit to that, you need to make sure that you've got approvals. Otherwise, it would end up with some other legal issues down the track. In the recent years as well, a lot of people have asked us about lending requirements in Australia. And it is true that most of the banks have actually tightened their lending requirements for foreign investors. And in fact, some banks have stopped lending altogether for foreign investors. So one of the things that we've done at ANZ Private is that we've continued to provide flexibility to assist migrant clients, particularly those with income sources from Hong Kong, are viewed more favorably than other countries due to the strength of your financial systems, and therefore we are able to assist our Hong Kong residents with lending, particularly when they're purchasing their residential homes. Over the next 24 months, we expect property prices to remain stable, but we also expect property prices to increase over time due to the fact that we expect in order for Australia to recover from the COVID-19, as Mark touched on, immigration will actually return. And in fact, the government has increased immigration intake from next year. At the moment, the Airbnb market has actually almost come to a halt because there is no interstate travel. But once interstate travel bans lift, we expect Airbnb market will also increase as well. We do expect rental markets will continue to be stable, as well as low demand, because there is low demand, but at the same time, that's been offset by the lower construction rates as well. What's interesting to have, what we've noticed with COVID-19 is the regional areas with 1 hour proximity to the CBD areas. Those areas have actually experienced an increase in property values, because now with people adjusting to flexibility and the future of the workplace where they're not required to be in the office, they can actually move away from the CBD and from inner city living, and we're finding that properties in the regional areas is actually going up in value. So a bit like Mark said, in immigration rules changes over time and is consistently changing. But at the same time, if your plans are looking to settle in Australia in the long term, this might be the time to start thinking about and doing some research on where you would actually like to settle in Australia from a property standpoint. So just over to the next page. Mark, I just wanted to touch on, we have a website, ANZ has a website which you can actually access online, and it actually helps you provide you with some valuation. It's just comprehensive property reports. These are not formal valuation reports, but it just allows you to access information, particularly when you're offshore, to give an understanding of the area, the suburb, the infrastructure around the area, these historical prices, and these reports are readily available to anyone that logs onto the website, and you don't actually have to be a client of ANZ to access this. So they're very useful reports, and our migrant clients find them really useful. So just moving on to the healthcare system at a high level. At a high level, Australia has a public healthcare system called Medicare and a private healthcare system which has a number of providers. There is a bit of a misperception, particularly for migrant clients, that says that when they arrive in Australia, they have access to free healthcare. That's not entirely true. So Medicare is only available to permanent residents and citizens. So in the period then where you're a temporary resident or a provisional resident, it's really important for you to consider private health insurance. And purely because you won't be covered by the public health system at that time until you acquire permanent residency. So as part of your journey and migrating to Australia, particularly if you have young children, it's really important that you consider taking out some private health insurances. So just moving on, Mark, to the education system. I thought I'll share these resources with you. By all means, I'm not an expert in the education system, but I can certainly talk about my personal experiences. I have children that have gone to the public and private school systems. And I think, depending on what you're looking to provide to your children, there is an option of the private school system. And the one thing to note is if there is a particularly public school that you want to get your child into, you have to be in the catchment area. So we always tell our migrants to choose the school first before you choose where you want to live. Because if you're not in the catchment area, then you're not guaranteed a spot in the public schools. In some private schools, the waiting list is very, very long, even for local residents. So it's really important that if you are starting your migration journey, is to consider the schools as well right up front, and having an application form in the queue, because sometimes it can actually take a few years for you to actually secure a spot. In the extreme cases, we have had local residents that say that within the first year the child is born, they've got their names on the enrollment list. So it's really important that you consider this right at the beginning of your migration journey. And schools, education is compulsory for all our children from the age of 5 to age of 17. And you can choose between the public and the private school systems. So on this slide, there are a couple of resources that I've provided you and for you to have a look at, and also which will give you some guidance on the types of schools and what curriculum you're looking for as well. And further, if you've got older kids and older children that are looking to enter universities, Australia's universities are ranked among the highest in the world. In actual fact, we have 37 universities in the top 100 ratings in the Times Higher Education Index. So we're really proud of that. And then depending on the visa category that you are coming to Australia, your children may be able to enroll in these universities as a local student. So you're not actually having to pay international student fees. So that's one of the things that you probably need to think about. But the good thing is, because we've got so many universities that has this ranking, is that regardless of which city you decide to settle in Australia, you're bound to find a top class university in that city. And Australia is also got a large education export market. In actual fact, Australia has the third largest international student market after the UK and the US. Of course, that is pre-COVID, and at the moment, a lot of our international students are still enrolled in our universities, but learning remotely. So I'm just going to move to my final session around investment solutions for complying investments. And in ANZ Private, we have our internal Chief Investment Office, and our investment philosophy is to invest over the long term. And we believe the long-term investor will outperform the short-term investor. Diversification is still key to manage your risk and also manage your returns. And at the moment, the market, as you would recognize, is there's a lot of volatility and there's a lot of unknowns. That's what's happening as well. So we strive to make sure that our investments are very simple and transparent. And we also have robust governance to make sure that the portfolios are managed efficiently and compliantly. And this is a very important point, particularly for those that need to invest in complying investments to meet visa requirements. And we take that absolutely seriously. And in actual fact, I'm proud to say ANZ Private was helped one of the first SIV clients lodge their investments, and subsequently that SIV client has acquired their permanent residency visa with the investments they had put with ANZ, and over time this client has also become a long-term client of ours as well. So over the page, the other way, as part of our investment philosophy, we take an active asset allocation approach as well as a tactical approach with our investments. So we look at investments from a strategic sense, but also we take tactical pivots depending on what's happening in the market. But all in all, our investment philosophy is to preserve capital and also provide clients with some reasonable returns. So you can be assured that if your investments are with ANZ, it is not about chasing the highest returns, and not having volatile returns. It's about the long-term investments in our portfolios. And finally, ANZ provides a full solution for significant investor visas. If you are considering coming to Australia under the significant investor visa, ANZ Private offers a full range of investments that meets these requirements. And we were one of the first institutions to partner with the government when they introduced this scheme back in 2012. And we provide these services on a holistic basis. So we provide full advisory a proposition, as well as we guide our clients in terms of picking those investments as well. We take into account your overall circumstances without just looking at a product placement. Probably another thing to note is that you will find that some migration agents would encourage you to invest in certain investments or certain fund managers. I would like to say that we worked on a very professional basis with the likes of Mark and Alison, where we actually don't provide referral fees. And that's something to be aware of, that sometimes your investments might be influenced by your migration agent, and the fees that the migration agent charges you might differ depending on where you actually place those investments. We like to remain independent of different advisors that are part of your migration journey, and we absolutely do not partner with people that receive a referral, that is asking for a referral fee. And that's why we're really proud to work with people like Mark and the Globility Group to ensure that we can remain segregated, but also there is no conflicts of interest there. So with this regard, I'd like you to thank you for listening to my presentation. My contact details are here, and I will pass back to Mark.
Thanks, Grace. And look, let me, at the risk of embarrassing Grace enormously, but I've worked with Grace now for many years, and Grace and her team at ANZ have the highest of integrity, and particularly now as governments are looking to kickstart their economies. I think governments are going to look very closely at the level of integrity that is applied to all cross-border movement. So in the past, and this is pre-COVID, governments such as Canada, for example, have historically run a very successful investor immigration program, but the Canadian government ceased that program very suddenly as a result of the level of public distrust that arose as a result of the lack of return on investment of that program. So I know that's an area of focus, and I know Grace knows this as well because she's also speaking to government. But the Australian government is going to look at integrity measures around a number of different immigration programs, and I think front and centre is the Investor Immigration Program. I'm really pleased to see and hear that the Australian government has no intention of discontinuing the program, but it certainly wants to ensure that it remains supported by the community as well as by all of the service providers who touch on this area as well. So thank you, Grace. So let me wade into the murky waters of immigration for a little while and try and demystify what's happening in the world of immigration during COVID international border closures and give you a glimpse of what the near-term horizon might look like. I wanted to start with some recent government announcements that are particularly relevant and obviously attractive to Hong Kong nationals. I mentioned during my my opening that Australia is one of a range of governments who are fiercely competing to attract its unfair share of talent from Hong Kong to their local economies. Australia is competing with the likes of particularly the UK, where a number of Hong Kong nationals have favourable residency status in the UK, and the UK government is obviously looking to extend the allowances that go with that favoured residency status to lure as many Hong Kong nationals to the UK as possible. But there are certain advantages that I think Australia presents that are unique, and I touched on a couple of those during my presentation. But let me talk about the recent government announcements and particularly focus on the why, the who and the what. So first of all, the why. So the Australian government have recognised that there is an incredibly attractive talent pool in Hong Kong that it wants to attract to Australia. But that attraction of that talent pool in Hong Kong is taking place in a very targeted way, and I'll expand on that during this presentation. There is a large Hong Kong diaspora that's currently in Australia, and that allows the Australian government to make policy decisions to attract a greater share of talent from Hong Kong to Australia, because one of the most successful integrations in the Australian community has been the Hong Kong community. So it's a very easy extension that the Australian government is making around a number of the policies that it announced recently. Obviously, recent events in Hong Kong, and to a certain extent, the greater level of uncertainty that those recent events both create now and potentially into the future, is translating to a greater level of uncertainty for the business community, but also investors. And I've certainly seen a very significant spike in interest from Hong Kong nationals who are obviously concerned about that lack of certainty in the next 12 to 24 months in particular. And not just for their investments or for themselves, but importantly and significantly for their extended family. So who is being targeted by these recent announcements by the Australian government? Well, there are three buckets, if I can put it that way. So certainly at the moment, visa holders who are currently in Australia, who are residents of Hong Kong, are being given a favourable treatment in terms of being allowed to stay, in many cases, significantly longer periods of time than might otherwise be the case. And I don't know of any situation where a Hong Kong national who was temporarily in Australia that would otherwise have been facing the need to return to Hong Kong, particularly as a result of COVID-19, in virtually every case, those nationals are being allowed to remain as a result of these recent government announcements, in many cases up to 5 years. You heard earlier from Grace the importance of the education sector, both secondary and tertiary. The education sector is part of these recent government announcements that the Australian government has made, which allows future student visa applications from Hong Kong being given priority processing status, and also an expedited and favourable transition to longer term residency in Australia. And then lastly, and this is the area that hasn't been blessed with too much detail at the moment, but I actually think it's the area that's going to generate the most interest from Hong Kong, particularly in the business community, is that the global talent that has in many cases forged their career in Hong Kong or built a significant business presence in Hong Kong that might have been focused around unique talent very senior executive or unique skills talent that's in Hong Kong, or export-oriented businesses that are based in Hong Kong, there will be policies specifically designed and implemented to attract that level of talent and business from Hong Kong to Australia. As I said, there's not a great deal of detail available on that at the moment, but I would hope and expect over the coming weeks that we'll see more of that. So we're more than happy to stay in touch with you as that detail becomes more widely available. So what is it that the Australian government has announced? So first of all, temporary graduate or subclass 485 visa holders, as well as sponsored temporary resident visa holders that were in Australia on the 9th of July will automatically, or will have had their visa automatically extended for a period of 5 years. So just take a moment to consider that. So generally a temporary graduate visa, for example, holder would be granted a visa of anywhere between 2 but a maximum of 4 years. If they're in the 4th year of that temporary graduate visa, they will enjoy a 5-year extension to that visa, automatically granted, simply if they were in Australia on the 9th of July 2020. Now, I've not seen a policy like that implemented by the Australian government since the days of the Tiananmen Square incident, I think back in 1989, if memory serves me correctly. So this is a very significant decision. Building on that, any current and future students from Hong Kong will be eligible for a 5-year temporary graduate visa. Again, that's a very significant decision. So once a student completes their course of study in Australia and they meet the successful completion of those study requirements, they will be eligible for the 5-year temporary graduate visa. That gives those skilled Hong Kong nationals a very clear degree of certainty for a very substantial period of time. And a 5-year temporary graduate visa also gives Hong Kong nationals who qualify under this program a very strong pathway to permanent residence as well. So this policy enables a very long-term future for Hong Kong nationals and students that choose to study and work in Australia as a result of those studies. And then finally, Hong Kong passport holders who apply for a temporary skilled visa will be eligible for a 5-year visa as opposed to a 4-year visa. The only requirement there is that the occupation needs to be listed on the skills occupation list and needs to meet labour market testing requirements, but those requirements are very clearly stated and very transparent. So there's no degree of ambiguity as far as whether you meet or don't meet those requirements. Now, interestingly, I think that will mean that if the occupation would otherwise mean the granting of a 2-year temporary residence visa because it was on the short-term occupation list, this policy gives rise to the granting of a 5-year visa for Hong Kong passport holders. Again, there's a little more detail that's required to be coming out around this policy, but that would be my interpretation of what the government has announced. So the recent government announcements as far as Hong Kong is concerned are both significant and, as I mentioned earlier, certainly unprecedented in the last 30 years or so. So I think it's important to really call that out. More recently in October, the Australian government announced the formation of a task force combining government and private sector experts as part of its efforts to drive economic growth in Australia, both in terms of economic growth, but also job creation. Now, that strike team are targeting a number of key locations. One of those key locations is Hong Kong. So there is a government team physically in Hong Kong at the moment, working as an extension of the Australian consulate in Hong Kong that are charged with luring international businesses to Australia, and particularly targeting those skilled Hong Kong nationals who have particular skills around advanced manufacturing, financial services, financial technology, and health. Those particular areas are areas that the Australian government have identified that are critical to economic recovery and future economic growth. If you are a Hong Kong national in Hong Kong who has even remotely considered moving cross-border to Australia, and you work in one of those areas and have skills and attributes in one of those areas, you're going to enjoy, frankly, an expedited pathway, both to temporary residence and ultimately to permanent residence as well. And in many cases, we're seeing ridiculously fast turnaround times on applications, in sometimes as little as 2 to 4 weeks from date of application. And I'm not seeing that degree of support for a number of other visa categories elsewhere. The Australian government is investing significant resources in attracting Hong Kong, talent from Hong Kong, who have, as I said earlier, those skills to help build economic growth in the period post-recovery of COVID. The Australian government, over in the past, as recently as the past week or two, has started to actively look at opening up what we call green travel channels. At the moment, countries such as New Zealand, Singapore, Japan have been identified, but the reason those countries have been identified is because they have similarly low infection rates and similarly robust infection control mechanisms and health policies to support their response to the COVID pandemic. Hong Kong clearly is in that category. So I think that Hong Kong will enjoy those same benefits of the green travel channels that Australia is actively looking to open up. And I would dare say some of those channels will open up this side of the end of December, but most particularly in the first 3 months of calendar year 2021. So what are some of the benefits of that? Well, obviously, it is a very targeted talent attraction exercise, and that's a good but also a very necessary thing when governments are looking to drive economic growth. The days of a very broad-based immigration policy that acted almost as though it was a de facto population policy, I think are passing into history. Australia is one of a small number of governments that are actively looking to develop a very targeted immigration program that's geared towards its economic and health priorities. And I think what I've shared with you now is a couple of examples of that. For Australia, for the reasons I mentioned earlier, this is a very low risk policy because of the very strong and successful history that Hong Kong has in integrating very successfully in Australia, both in a community sense, but also in a business sense. And in that regard, the Australian government sees an immediate return on its investment in this policy area for Hong Kong nationals. Some of the challenges include, in my assessment, that it's not suitable for every role. So there will be many Hong Kong nationals who would otherwise be eminently suitable and qualified to apply to come to Australia, but because they might fall outside of or on the peripheral of some of these higher priority areas, may not receive the same degree of preferred immigration treatment that others might. So I think that will eventually work itself through as the policy becomes a little more mature, but at the moment it's a very targeted policy. The policy and the concessions that have been identified obviously don't sit comfortably with the existing international COVID travel restrictions that Australia has in place. The Australian government recognises that's an anomaly that it needs to fix, and it is actively looking at fixing that. So, for example, most Australians, in fact all Australians who are returning to Australia as a result of COVID, are forced into compulsory 14-day quarantine at their own expense. The Australian government, via these green channels, are looking to waive that compulsory 14-day quarantine for those categories that it has given the green light to. So I mentioned earlier, New Zealand, Japan, Singapore. I'm sure Hong Kong will be included in this as well. Because of their strong and robust response to COVID, they will not be forced into 14-day quarantine on travel to Australia. The policy lacks detail at the moment, and I am a policy guy, so I'd really like to see a little more meat around the bones of the detail. I'm sure it will come sooner rather than later, but until we do see that detail, unfortunately, in the immigration law, what that translates to is a high degree of discretion on the part of government. And I never like discretion when it comes to immigration, because discretion often with a bureaucrat leads to refusal. And I think particularly these days, for anyone that's looking to relocate across border at a very volatile time, particularly with their family, needs transparency and certainty in those decisions. So I'm pushing very hard to get that level of certainty. At the moment, the focus is very much on skilled migration, and that is at the expense of family migration. That is likely to continue for the foreseeable future. I think that for the next what we call program year of immigration, there will be a strong emphasis and weighting towards attracting skilled migrants to Australia at the expense of family migration and regrettably refugee and humanitarian migration as well. Australia does have treaty obligations in the refugee and humanitarian area, so to a certain extent that's hardwired in terms of needing to be met, but it's not unusual for the Australian government to move places and allocations of visas from the family migration bucket to the skilled migration bucket so that it doesn't exceed its overall immigration target. And I think that's what we're likely to see over the coming months. So what are the immigration options for investors and entrepreneurs and business leaders in this, this myriad of immigration options that exist in Australia? I've tried to break it down for everyone into 3 areas. So for investors, under the Business Innovation and Investment Program, there are 2 what we call streams of visas that I think are most relevant for investors, and I'll speak briefly about those. For entrepreneurs, again, in the Business Innovation Investment Program, there are 2 visa categories that I think are very well suited and tailored and designed to support entrepreneurs. So when I talk about entrepreneurs, I'm talking about those business leaders who built up a business and run successfully a business, either as a startup or from a startup to a more mature business successfully in Hong Kong, and are looking to leverage from that business success to do something similar in Australia. Well, there are 2 visa categories that I think are designed and suited for entrepreneurs. And then finally, business leaders, which is more an evolving bucket. The Australian government have invested very heavily in what's called the Global Talent Program. And it's the Global Talent Program that we are seeing unprecedented quick turnaround times in visa applications. I mentioned to Grace in a conversation we had a week or so ago that I've actually seen some visa applications under this category decided in under a week, which is ridiculously quick. But generally, we're finding that applications lodged under the Global Talent Program are being decided routinely inside of a month. Importantly, all of these visa categories that I've identified here, and I'll speak about in a moment, have pathways to permanent residence. They all are temporary resident visas, but with a pathway to obtain permanent residence. In some cases, the pathway is a little quicker than others. Now, the reason I say that is that it is important for tax planning purposes. And Alison will speak about this in a bit more detail. So when you're planning your movement from a foreign location to Australia, you really need to think about both temporary residence and the planning issues that go with being a temporary resident in Australia, and then what happens when you move from temporary residence to permanent residence. But I'm not going to tread on Alison's toes when it comes to speaking about tax, because she'll virtually kick me under the table if I do that. So let me go into a bit of detail, and I'm conscious that I don't want to throw too much detail at you. One, it'll put you to sleep, but two, there's an enormous amount of detail that's available on immigration programs. So what I'm going to give you is just a high-level snapshot on the areas that I identified in the previous slide. If, however, any of these areas remotely sound as though they might be relevant to you or might be of interest to you, I encourage you to reach out, and I can do two things. I can give you a lot more detail, but importantly, one of the things that I do together with Grace and Alison is that I do a pre-application screen for you. It's very important that before you move forward with any of these visa options, you need to have as much comfort that it's the right option for you, and that option will result in the outcome that you're looking to achieve. That approach has meant that I'm fortunate that I enjoy 100% success rate in every visa application that I've lodged under the investor immigration category and the categories that I'm speaking about here. But I'm touching wood as we speak, because that can always change. So first of all, the investor stream. So the investor stream is ideally suited for people who want to make a designated investment of at least 1.5 million Australian dollars in an Australian territory, because the visa needs to be supported by an Australian state or territory. So one of the first decisions you need to make is, where do you want to migrate to? Because each state and territory in Australia, whether it's New South Wales and Sydney, Victoria, Melbourne, Queensland, Brisbane, each state and territory has its own rules that sit over the top of many of these categories that require state or territory involvement. So you can't move forward with the visa application until those state and territory requirements are met. The applicant needs to demonstrate that they've had a successful record of eligible investments or running a qualifying business activity. There are certain defined areas that need to be met in that, and again, I don't plan to go into detail. Most of the applicants who are contemplating this area, that's an area I look very closely at, and the Australian government generally will look back 3 years from the date of application, sometimes 4, but at least 3 years in terms of determining successful eligible investments or successful business activity. The applicant needs to demonstrate also that they have a high level of management skill in relation to either their investment or qualifying business. So if they were either passively involved or at a more an operational management level, they might find it's difficult to meet that requirement. The person needs to be actively and conspicuously involved in running their business or running their investment. And then the applicant needs to have a total of at least 3 years experience of direct involvement in either their investment or eligible business. No history of involvement in business or activities that are generally not acceptable to Australia. I frankly have never come across or worked with an applicant that has fallen foul of that requirement, but if in my pre-screening of your application there is an area of concern, I would obviously raise that with you. So that's the investor stream. I'm dealing with some applications in the investor stream at the moment, but again, it's in that pre-qualification stage. There is an enormous amount of supporting documentation and evidence to support the application needs to be worked through before you even remotely contemplate getting to the application stage. The next area I want to talk about, which is very relevant for investors, and one that that Grace and I work very closely on and have done so for many years, is the significant investor stream. Now, Grace mentioned earlier the areas that make up what's called a qualifying investment, and I've restated those here, so I won't go into that. But this visa category is very popular, I think, for a couple of very particular reasons. First of all, unlike many other visa categories that have an age limitation of 55 years at the date of application, there is no age limitation to this visa category. Often I've found that very successful investors or business entrepreneurs are over the age of 55 years, and they're automatically, as a result of that, locked out of other visa categories unless they can demonstrate a significant benefit to the state government where they intend to reside. But that's a very difficult threshold to meet. So this visa category not having an age threshold is very attractive. There's also no requirement to meet English language, which, seeing where the Australian government's going with English language requirements in a number of other visa categories, is incredibly attractive. There is no minimum English language requirement to be met. I know for a number of applicants from Hong Kong, that's English language is often not an issue, but what is often the issue for applicants from Hong Kong is meeting the level of English required to meet the visa category, because there are different thresholds. Some are higher than others. There are functional, competent, and vocational English language. Each one is higher than the other, but this does not have any English language requirement. The other thing I might mention is that there is no, or there is a concessional, what I would call a concessional residency requirement in Australia, where the applicant is not required or is required to meet a lower level of number of days physically in Australia during the 4-year temporary residence visa that's granted to them, that allows the individual to continue to run a business offshore, for example, and spend more significant periods of time outside of Australia in order to continue to run their business overseas whilst being able to still meet the requirements of this visa. So there are 3 examples where the concessions available to this under this visa category, in spite of the relatively high level of investment threshold of $5 million required, makes this probably the most attractive of the business innovation and investment program category of visas. And I don't expect that's likely to change. I will say, and I'll invite Grace to speak about this later during the presentation as well, the Australian government is reviewing the Business Innovation Investment Program, and it is expected that there will be changes to certain visa categories, including this one potentially, that will become enacted in July of 2021. Now, the details of those changes are still unclear at the moment. Grace and I are more than happy to share our views on where that may go. But what that translates to in our view is that, again, going back to that area I mentioned earlier, where what you're looking for most, I suspect, is a greater level of certainty in making decisions in the future. Certainly look at getting applications lodged under these categories before any changes are contemplated. And once, the way immigration law works in Australia is once an application's been lodged, even if a change takes place, you will not be retrospectively impacted by that change. The business innovation stream is an area that is particularly attractive for people who wish to own and run a new or existing business in Australia. This is particularly attractive for entrepreneurs who don't have any intention of maybe leveraging off their existing investment portfolio, making a complying investment, and then simply residing in Australia and maintaining that complying investment, even though that's very attractive. There are many applicants who would prefer to look at making a lower investment, and under this category, the investment level required is $1.5 million. It still requires state and territory approval, but it is ideally suited to individuals who want to continue to either acquire a business, existing business in Australia, or open or run a new branch of their existing business that's been run successfully offshore. So, for example, I'm helping an applicant who's run for many years a very successful business overseas. It's a travel business. There's not a lot of business in the travel business at the moment, but he's using the period of low activity, business activity, to pursue an application under this category. And that's frankly a smart thing to do, because he'll be able to ride the crest of the economic growth wave as international borders open. But this is a very attractive category for that individual to open up a branch of what is a very successful offshore business in the travel sector in Australia. Now, it's subject to what's called the business skills points test, and points are accumulated across a number of different areas, including business activity, age, English language skills, but the applicant needs to meet the business skills points test and score at least 65 points in that test. Most applicants tend to meet that requirement, but the Australian government does have scope to change the threshold requirement of points that need to be met at their discretion if they ever need to. So again, that's a good reason and a good excuse to pursue this category sooner rather than later. There is a requirement to meet a net business and personal asset test of currently $800,000. That can be a combination of business and personal assets. And again, the applicant needs to demonstrate that they've had an overall successful business career. And a successful business career is defined in the regulations. Another area I want to talk about is the business talent visa. And the business talent visa is a very attractive visa, and certainly very attractive in some of the smaller states of Australia. So, for example, it's been an area of policy that's been very successfully pursued in locations such as South Australia and in Queensland, where those respective state governments have built policies very much targeted at attracting applicants that have had a very successful business that they've run overseas to opening up their business in a particular location in their state. So this is a very attractive visa, particularly to those smaller states. Generally, the larger states such as Victoria and New South Wales tend to not have policies that are favourably disposed to attracting visa applicants under this category. And the reason for that is that the larger states generally have less need to attract very targeted businesses that are in this $1.5 million turnover category, or sorry, $3 million turnover category. So generally, the requirements that need to be met needs to be sponsored by state or territory government. The net value that the applicant needs to have is of at least $1.5 million in assets that they've lawfully acquired. They need to demonstrate that their business that they've run overseas has had a turnover of $3 million for 2 of the last 4 fiscal years. So this is one visa category that's going back 4 years rather than 3 years or 2 years that I mentioned earlier. As long as it's 2 of any of those 4 fiscal years going back from the date that the application is lodged. And then total net assets of at least 400,000. Again, in 2 of the last 4 fiscal years before the applicant is invited to apply. Then I might speak briefly about the Global Talent Program. This is outside of the Business Innovation Investment Program, and this is the area that the Australian Government is investing very heavily in, and we're seeing very quick turnaround times in application timeframes. There are two streams under the Global Talent Program that I'd like to talk about. The first one is the Global Talent Independent Program, where, as the name suggests, the individual rather than the employer applies to have their skills recognised under the program. In order to do that, they need to demonstrate that they are internationally recognised with evidence of outstanding achievements in their field of expertise. And they need to be still prominent in that field of expertise. There are certain industry sectors that are being targeted by the Australian government, and I've listed those there. I particularly want to call out the fintech, financial technology, and the information communication technology areas that are particularly attractive to the Australian government at the moment. There are skills and occupations that are in very acute short supply, together with the health sector, that the Australian government is really going out of their way to both target and attract to Australia. Then there is a stream where employers are able to apply for the Global Talent scheme in order to use the scheme to fill identified skills that are in short supply for their business. And in order to meet the requirements I've listed here, the business must be able to demonstrate that they can't fill the position through existing skilled programs. So there are many existing skilled programs that would be well known to many of you, including temporary residents, the temporary skills shortage visa. But in order to access this scheme, the employer needs to demonstrate that the visa cannot be issued under that particular category. That it aims to bring globally mobile, highly skilled and specialised individuals to Australia who are able to act as what's called job multipliers in the Australian business, in other words, create growth and create direct and indirect employment opportunities, particularly in those areas of critical areas of need. And those critical areas of need are likely to evolve as the government moves through the different stages of the pandemic. And the employers must demonstrate also how they realise these opportunities through the Global Talent Employer Scheme as well during the agreement period. And the agreement period generally runs for a period of 3 years. So there are 2 or 3 areas that are particularly attractive to investors, entrepreneurs, as well as global talent. I just finally wanted to speak about the current processing environment before I hand over to Alison. The current processing environment is, as I mentioned earlier, very volatile and very changing. In spite of the volatility and changing nature of the COVID-induced environment, the Australian government is looking to try and develop as much policy certainty as possible. On this slide, I've shown the current processing timeframes, particularly around investor visas. Those timeframes might vary slightly, but generally I find they're pretty accurate. This is outside of the Global Talent Scheme, which obviously are being decided in a far shorter timeframe than investor visas are. A little bit about me. I've been involved in immigration for over 25 years, historically within Big Four firms, Big Four accounting firms and professional services firms, but also been working very closely with government around particularly collaborating in designing immigration policy, not only for corporates, but also importantly for investors. That's where I spend a large part of my life at the moment, just ensuring that I work with government, that they design immigration policies that are not going to be to the detriment of companies or high net worth investors or entrepreneurs who are looking to relocate to Australia. And with that, I will hand over to Alison to speak about all things tax.
Thanks, Mark. So Mark and Grace have talked about how we get here. and I get the fun bit of talking about what happens from a tax perspective once you get here. So hopefully I'll be able to demystify a little bit about our frighteningly headline rate, top rate of tax of 47%, including Medicare. So I'll just say that quickly because I know in Hong Kong that is an incredible amount of tax to have to think about paying. So firstly, Mark, if you can just flip through for me, thank you. I'll just give you a little bit of information about Pitcher Partners and our international network group, the Baker Tilly Network. And then we'll look at the Australian tax framework and then look at the special tax status that's the temporary resident. Mark's talked a lot about the different visas, and a lot of those that he's mentioned are temporary resident visas, and that has some specific tax and Medicare issues. And I'll look at some of the traps and some of the differences. Some of them Grace has already mentioned, but we'll look at that as well. And then importantly, should you decide to make Australia your permanent home, you want to apply for permanent residency and an ongoing citizenship eventually, I'll look at demystifying and what we do from a planning perspective when it comes to reducing that nasty headline rate from 47% down to a slightly more palatable sort of average 30% if we can. So that's what I work with a lot of my clients to do. And then we'll just make some comments about the common reporting standards and the sorts of reporting that happens from an Australian perspective. My risk management team say that I have to say that this is all just general advice, and your personal circumstances will impact your tax affairs. So this is all just general advice. So they're happy now. So who are Pitcher Partners? We're a national network of independent accounting firms across Australia, based in Adelaide, Sydney, Newcastle, Melbourne, Brisbane and Perth. Sydney, where I come from, we're delighted to have 4 partners who are purely devoted to dealing with individuals, high net worth and ultra high net worth family groups. So we don't do trading businesses. We're not a group of partners who dabble with a trading business and then do the individuals at the end. We are purely dedicated to looking after families and individuals moving to Australia. We also have the support, if you could move on, Mark, for me, of the Baker Tilly global network. So this is I've been in this industry for nearly 25 years, as Mark has. You can perhaps tell from the accent I'm not originally from Australia. So the journey that some of you are contemplating, I've already taken and done. So I like to help my clients by sharing some of those experiences. So Mark and I have known one another for over 20 years, which is a little bit scary. But we do use the Baker Tilly network.
Mainly for you, I think it is scary, Alison.
Thanks, Mark. So we do have the support of the Baker Tilly network, and particularly we have there's 2 partners, me and Daniel Sparks, and we spend a lot of time liaising with the Baker Tilly network, who are all similarly focused on the same sorts of areas. So what's the Australian tax system like? Well, it's a mixture of direct and indirect taxes levied at both a federal, a Commonwealth and a state level. I'm based in New South Wales, in Sydney, so most of my examples will be based on New South Wales, but most of the states and territories levy similar additional taxes, although the rates and the allowances may differ slightly. So how does the Australian tax framework work? It's based on a self-assessment model where taxpayers are responsible for lodging their own tax returns, whether you be an individual, a corporate, a trust, a partnership. So everyone has to file a tax return. Companies have other obligations. They need to file, they're basically a collector of taxes for their employees, and have to file it either monthly or quarterly, what we call business activity statements, and collect tax on the for the ATO. So not only are they in business, but they are also collectors of taxes as well. So yes, it is a self-assessment system. Most tax returns go through fairly quickly, although the ATO will and do audit individuals and companies' tax returns to ensure that the actual tax affairs are consistent with the self-assessment. To file a tax return, you will need a tax file number. Grace mentioned that ANZ will need a copy of the tax file number, or need to record the tax file number, partly because if they don't have a tax file number, due to common reporting standards, they have an obligation to withhold 45% from any interest credited to any accounts where the tax file number is not provided. If you provide the tax file number, interest is paid without any deduction of tax at source. So for employees, if you're employed by an Australian company, most of the tax is withheld at source by your employer through what we call PAYG withholding. And that will include Commonwealth tax, the Commonwealth taxes of income tax and Medicare levy. So looking at some of the other taxes, we have from an investment perspective, we have you may be in receipt of dividends from a company, and dividends are either franked, i.e. come with what we call an imputation credit of between 27.5% currently and 30%, which the individual can take advantage of in their own personal tax returns. So although the dividend comes with some withholding, you don't get 100% of the dividend in many cases if it's fully franked. You do get a credit for the tax that the corporate's paid at the corporate level. So it's not 30% at the corporate level and then another 47% at the individual level. So that corporate tax is paid by companies. We are currently looking at a rate of 27.5% for trading businesses, although passive investment vehicles, and I deal a lot with passive investment vehicles because a lot of my clients will hold their wealth through either a trust or a personal investment company. They are still taxed at 30%. We also have a strange tax by the name of fringe benefits tax. I think we're one of 2 jurisdictions in the world where if an employer provides benefits in kind, cars, medical insurance, those sorts of things, instead of the individual paying tax on the value of that benefit, the company pays it in a form of FBT. But the ATO are quite clever in that that is at an effective rate of the top rate of tax being 47%. So it's quite an expensive way to provide benefits. So you'll find that you don't get many benefits provided through your employer, typically, because FBT is 1, an expensive burden for the company, and 2, a bit of an administrative nightmare. We also tax capital gains. So that's tax on the realisation of an asset, and there's special rules about the valuation of assets, and what I'll come on to a little bit later on how there's a difference between temporary residence and permanent residence, and the deemed acquisition for Australian tax purposes of your wealth that you hold offshore when you become or when you're granted that permanent residency status. Personal use assets, so motor vehicles and guitars, those sorts of things are not subject to capital gains tax, fortunately, but most other assets are. So shares, real property will be subject to capital gains tax. It is subject to just the normal rates of tax. There's a slide coming up with the frightening tax rates in Australia and how quickly they kick in. But if you've held an asset for more than 12 months, you do get a 50% general discount typically. So it effectively reduces the tax to about 23.5% maximum. We've then got GST at a federal level, which is our consumption tax. So it's very similar to value-added tax, and ultimately, as the final consumer, we are the people who suffer that tax. It's currently at a rate of 10%, and the provider, the company supplying the goods, collects that for the ATO through that quarterly or monthly basis. So once you hit a certain turnover, or there's an expectation of a certain turnover, if you're in business, and that turnover is not that high actually, it's $75,000, you will have to register for GST and add collector of taxes to your skill list. So they're the main federal taxes, so it's at the Commonwealth level. We then have some state taxes, perhaps not so widely known. So we do have a land tax, and individuals and other entities who own land in Australia over a prescribed value are liable to pay land tax annually on the combined value of all the taxable land that they own. So the rate does vary between states, and the nil rate band effectively does also vary, but typically across the country, your main residence, your main home, or your principal place of residence is exempt from land tax, as is typically any land used for primary production, together with some land used by charities and religions and schools are exempt. So just to give you an idea, in New South Wales, there's a progressive scale of land taxes, and they're paid on land with a value of over 629,000. So when we're looking at this with clients, obviously if you're in a unit in the eastern suburbs, your land value, because it's apportioned on the land value, not the property purchase price, may be below that 629,000. But as Grace was saying, more people are sort of, particularly with COVID and more people working from home, people are buying properties and investment properties outside of the CBD. The land proportion of a house is going to be more than perhaps a unit in the city. There's also, and Grace did mention this earlier, there's a surcharge if you're considered to be a foreign person, and that can be quite expensive, an additional 8%. So I concur with Grace and the team at ANZ that, you know, renting until you've really found what you're looking for, and we can make sure that you're not considered this foreign person, can make buying much more palatable from an Australian perspective. Another state tax is payroll tax. That's paid by people who employ people, and they have an annual payroll of over 900,000 a year. And then we also have stamp duties on certain transactions, typically the transfer of property and dealing in shares for companies that are landowners. So that's imposed on the purchaser, not on the transferor, and the rates are slightly different depending on which state you're looking at. So in New South Wales, we've got a sliding scale dependent on the real value of the property. So those state taxes, particularly when it comes around to property, some look at land value, some look at property value. So you really have to understand exactly what the cost of purchasing property or real property in Australia is. So other things that aren't necessarily tax, but are sort of, some would say are tax in another name, include the Medicare levy. So as Grace said, Australia has a public health insurance scheme, and that is funded by Medicare levy and the Medicare levy surcharge. So it's imposed on all permanent residents and citizens, and some foreign nationals coming to Australia, but only from countries where Australia has a reciprocal healthcare agreement with those countries. So anyone coming in from Hong Kong will actually be exempt from the Medicare levy and Medicare levy surcharge, but therefore they will not be entitled to coverage under the public health system. in Australia, which means that, as Grace said, it's really, really important that you, particularly if you've got a young family coming with you, that you secure appropriate private health or private hospital cover, at least with an Australian fund.
Alison, can I just chip in there? So we have a question that's asked that one of our attendees hires people in a company in Sydney, and their question is, do they need to pay payroll tax on that?
So if the payroll, so the amount that the individual, that the employer is paying across all their employees in New South Wales exceeds 900,000, then yes, there's a payroll tax liability for that employer. Yeah, and there's grouping. So the ATO have thought of most things. So and so have state governments. So if you were thinking, well, I'll set up a different entity and employ 3 people and pay them $200,000 a year in 3 different entities, you will be grouped for payroll tax purposes and still be liable to payroll tax, I'm afraid.
Thanks, Alison.
Okay, hopefully that answers the question. I'm happy to take any questions and have a chat with anyone after the event. So not a problem at all, because I will be rattling through some of this stuff. One of the other taxes, which is not really a tax, but in Australia we have a compulsory provision for retirement. So anyone who is employed, their employer has to pay compulsory superannuation contributions for them, up to 9.5% at the moment, up to a salary cap, quarterly basis of about just over $55,000. So that goes into a superannuation fund that is locked in there until minimum age 55 or till you meet a condition of release. So that is purely for the provision of retirement. It doesn't grow completely tax-free because there is a superannuation contributions tax. So what happens when you make, or your employer makes superannuation contributions on your behalf, 85% gets invested for your benefit and for long-term retirement savings, and currently 15% is paid in the form of superannuation contributions tax over to the ATO. Then the growth within your super environment is taxed at 15% on income and 10% for capital gains. So from an Australian perspective, that is our most tax effective vehicle, superannuation, but you have to be very cognizant of the fact that if you're a temporary resident visa holder, there are you cannot leave your superannuation here, and you have to claim it under the Departing Australia superannuation payment rules, which is another at least 35% tax. So their superannuation is not particularly tax effective. It's not tax effective at all for temporary resident visa holders, only for permanent resident visa holders. So there are a few other taxes, customs duty, import duty around 5%, excise duty. We have a luxury car tax at 33% if you have cars in excess of $75,526 in value, slightly less for fuel efficient vehicles. So this is the slide that people hate, because it just shows how quickly our tax rates rise. The middle slide shows the rates for individuals, and for resident individuals. So that's a resident individual, whether you're a permanent resident or whether you're a temporary resident. What it doesn't include there is it doesn't include reference to the Medicare levy. So if you're a permanent resident, there'll be a Medicare levy. But if you're a temporary resident, it will depend on a number of other factors as to whether or not you're liable to that. If you're not considered a resident, so you under Australian domestic law, you're considered a non-resident individual. You're only taxed on Australian sourced income, but you don't get any tax-free pay at all, where a resident gets $18,200 tax-free. first dollar of Australian income is taxed at 32.5 cents. And that really catches our working holiday makers, and they really do get penalised now on tax, but that's sort of outside the scope here. To determine whether you're resident, we don't have there's not a days test or anything like that. It's all based on your ties and your residence, if you're resident here in the normal course of the word. So each individual, it's a very subjective tax, and every individual is determined very, very separately. And a lot of the time it will depend on whether we can rely on a double tax agreement from the country that you've been residing in before. Unfortunately, there is not a double tax agreement with Hong Kong, so we will have to look at your personal circumstances and where you're residing to determine your residency status. So the only good news is that the Australian federal budget last week did announce that we're hoping to reduce our personal tax bands and increase that top rate, or increase the threshold for the top rate to 200,000, but we have to wait to July 2024 for that. So this is the company rate. So we have two rates, as I mentioned earlier. We have base rate entities at 27.5%. Otherwise, you're taxed at 30%. So, and that includes corporate limited partnerships, strata titled bodies, trustees of corporate unit trusts, and any other public trading trusts. So a base rate company is typically someone with an entity who is in business, crudely, not a passive investment holding vehicle. If it's a passive personal investment holding vehicle, they will be taxed at 30 cents in the dollar. So who is a temporary resident? So a temporary resident is someone who's granted a temporary visa under the Migration Act, and it also is not an Australian resident within the Social Security Act, and is not in a married or de facto relationship with an Australian resident. So why is it important? Well, a temporary resident is taxed in Australia on worldwide employment income, but then only Australian sourced income. So, and treated as a non-resident for capital gains tax purposes, which gives a real opportunity for individuals to come to Australia and experience life in Australia without bringing your worldwide assets immediately into the Australian tax net. So that's why it's very important to think when you're applying, and it's important to make sure that your temporary residency visa can lead to permanent residency, and that's where Mark will help you. But it is very important to understand the difference between permanent residency and temporary residency on your visa. As a temporary resident as well, you may not be entitled to Medicare or benefits under the Medicare system, and you're only entitled if there is a reciprocal healthcare agreement with the jurisdiction that you've been residing in immediately before you become a temporary resident in Australia. So you may not have access to the public health system. Doesn't mean you're not liable to the Medicare levy, but you have to make a claim annually to get that back. You have to get a Medicare entitlement statement that says you're not entitled. So it's a good double negative. Equally, some of the other traps that I see with temporary residents are, as I mentioned before, the compulsory superannuation, if you're employed, is great, and super is a wonderfully tax effective vehicle from an Australian perspective. But if you're going to leave the country and your visa is going to be cancelled without having a permanent residency status, you do get caught with the Departing Australia superannuation payment rules, which means that your superannuation you collect it on the way out, but you can when you collect it, there's there's tax rates of up to 65%. I mean, the 65% is really for working holiday visa holders, but it's typically up to another 45% for temporary resident holders. As Grace touched on, as a foreign person, you may need Foreign Investment Review Board (FIRB) approval to acquire property, and whether you're an employee, an individual, a corporate, or a trust, that's the same thing. And when you sell Australian real property, you are subject to tax in Australia on that property, but you don't get the 50% CGT general discount that I spoke about earlier. So, and you also don't get a main residence exemption as a foreign person. So that's something to bear in mind. Once again, if you don't think you're likely to want to stay in Australia. In addition, if you're deemed a foreign person, there's that extra 8% surcharge per purchaser duty in New South Wales, and potentially an extra 2% land tax surcharge if it's not your main home. So it's very important to make sure that we're not considered to be a foreign person when we're looking at purchasing property, which, to Grace's point earlier, means that we often encourage people to rent, perhaps, before purchasing a property. And Grace also mentioned our public schooling system. So as a temporary resident, that's not free. It's not a free education. So you will need to pay a fee even to attend public schools of between 5,600 in New South Wales and 6,400 a year as an education fee. That's your contribution to public schooling. So that often, with a lot of my clients, will have an impact of whether they choose the public system over the private system, depending on the nature of the children. So that's all the sort of the trips or the traps for temporary residents. But when we're planning for permanent residency, obviously temporary residency is good. It's great. It enables you to experience life in Australia without bringing your worldwide income into the Australian tax net. But as soon as you become a permanent resident, you are taxable here on your worldwide income and gains, and you're deemed to reacquire your worldwide assets for their market value at the date that you're granted PR, denominated in Australian dollars. So what do we do? So this slide just demonstrates a typical Australian group structure, which offers asset protection, tax efficiency, and flexibility. And the team at ANZ Private will be very familiar with these sorts of regimes and these sorts of structures. And what it means is that you're holding your wealth in a different sort of vehicle rather than personally, that you control, but gives you the flexibility to manage your rate, your tax rate down to perhaps a more palatable 30%. And you'll see there that includes a superannuation fund in there as well, where the tax is only 15% and 10% for capital gains. So those are the sorts of things that we look to do and we look to plan. And I recommend everyone sort of gives it 3 to 6 months before applying for permanent residency. As Mark said, some of those permanent residency visas are being issued quicker than others. It's the date you're granted the permanent residency, and that's not quite always in your control. So it's always important to plan for those sorts of for worldwide taxation from an Australian perspective, given our 47% top rate of tax. So Grace also mentioned, I'll just fill in a little bit more about the common reporting standards, but we also have AUSTRAC, and we've had AUSTRAC in Australia since 1989. So AUSTRAC stands for the Australian Transactions Reports and Analyst Centre, and they're responsible for preventing, detecting and responding to criminal abuse of the financial system. So they're out there to protect the community against serious and organised crimes. So common reporting standards from an Australian perspective perhaps haven't had the teeth and the fear that some foreign nationals have worried about, because AUSTRAC will report every transaction, both into and outflow from Australia, of more than $10,000. And they'll report that to the ATO. Now, I will frequently, for my temporary residents, we have no gifts tax in Australia. There's currently no inheritance tax. I will just write to the ATO, and if they send me a notice and say, we've seen these transfers, we need to make sure that you are declaring your worldwide income. Unfortunately, there's nothing currently on the tax return to tick a box to say you're a temporary resident. So I then always write to the ATO and tell the ATO that my client is a temporary resident and therefore has no obligation to report that income, or there's sort of nothing to see here, please move on. But I think that's perhaps why some of the common reporting standards don't have, other than the banking issues that we have now, don't have quite such an impact on Australians and permanent residents, because we're used to AUSTRAC doing our reporting. So I've gabbled through there because we're running short of time. So the next slide has my contact details on. I'm very happy to have a chat with any of you offline or separately. You can contact me either directly there or via Mark.
Take myself off mute. Thanks, Alison. That was great. Very comprehensive. And in spite of it being liberally interspersed with bad news, I think with bad news, it's very important that with some foresight and planning, you can mitigate and minimise as much of that bad news as possible, which I think is a lesson Grace, Alison and I have learnt over many, many years. So just to finish up our presentation, I wanted to invite Grace in particular to discuss with me some of the issues that in our collective experience, together with Alison, we found that are relevant to consider when moving cross-border, particularly from Hong Kong to Australia. Also, I know Grace and I have been involved either directly or indirectly in the review of the Investor Immigration Program that's taking place at the moment, and we'd just like to share with you some of our insights and learnings out of that and where that might go. But first of all, some of the issues that we've touched on during this presentation that we do want to reinforce when it comes to issues connected to destination in Australia is, don't lose sight of the fact that state and territory governments have a very important role, and often pivotal role, to play in determining ultimately the success of many visa applications in Australia. And that was particularly relevant in the investor immigration category. And in fact, it's not possible even in many cases to apply for a visa without state or territory sponsorship involvement. Now, during the depths of COVID, there's been absolutely no visas available from state and territory governments. That's starting to ease up, and there's going to be a greater, and has been a greater allocation, particularly under the investor visa category. In fact, the Australian government has announced a significant increase to that allocation for the next program year. The other area I wanted to touch on is that don't lose sight of the fact that we're living in an environment that is very changing at the moment. Be prepared that there will be changes around policy and levers implemented by government to ensure that government priorities are met. The most important takeout I can give to you around that is get your application prepared and lodged as soon as possible so that you mitigate that risk of any future changes the Australian government might take. the policy review of the Invest Immigration Program. Grace, was there something you wanted to add on that?
Yes, thank you, Mark. Yes, certainly. In terms of what the government is looking at, is the current significant investor visa program, as well as the other investor visa categories, are currently under review, and there is discussions around raising the threshold in terms of the investments that is required under business migration as well as investor migration. And in regards to significant investor visa, they're looking at considering to increase the venture capital component of the investments. So in a couple of slides that Mark shared and I shared, for the significant investor visa, the investment is a $5 million investment, and that's broken up into $1.5 million into the emerging companies funds, and $500,000 or 10% of the investments needs to go into venture capital, and the balance, which is $3 million, goes into a balancing fund, and that's where really the only component an investor has some choice around the investments. But there is a lot of discussion about increasing the venture capital component, and the reason and the rationale for that is because at the moment, in terms of post-COVID economic recovery, the government is looking at trying to channel funds into industries and sectors where they need additional funding from investors, and that would have longer term economic benefits to the economy. So whilst that is great, but from an investor viewpoint and from an advisor viewpoint, is that venture capital as an asset class is always regarded as most risky. And a lot of times with our investors and migrants is that we probably spend 90% of the time speaking about and discussing the venture capital component, because that's where majority of the concerns would be. So I think to Mark's point, if you are considering about migrating to Australia, given that this is a continuously changing environment, it's probably really advisable for you to get your applications in sooner rather than later. At least it's in the queue. And if there's any changes that is going to be implemented, then generally and historically what we've seen is that there is a grandfathering period and you won't be caught up in any new changes that would come through. In the other categories, they're talking about increasing the current investment. So this is under the business migration and investor migration. They're talking about increasing the component from 800,000. One of them is 800,000 and the other one's 1.5 million to 2.5 million. So it's also increasing the bar on business migrants entering Australia, but equally also their rationale for that is also increasing the caliber of the type of businesses that people would set up in Australia as well. So there is some changes coming through, and they're anticipating these changes would, and this is not finalized yet, but probably around July next year.
Thanks, Grace. And then finally, to end with an inevitability of the current environment and for the foreseeable future, even post the availability, hopefully, of a vaccine, is that we are in a period where we're going to see far greater processing scrutiny applied to each and every application by governments, not only in Australia but worldwide. If you can perhaps equate that to the level of intervention that we've seen, some of it good, some of it not so good, from government around their response to the pandemic, I think that it's not a stretch for me to imagine that same level of very high level of government involvement around scrutiny of visa applications will take place. And I think that's likely to take place for the foreseeable future. Grace and I are already seeing that level, greater level of government involvement around even the investment portfolio mix that Grace mentioned to you. Even though those changes that Grace mentioned are foreshadowed to take place in July of 2021, it is possible that the Australian government could look at bringing those forward. So it is just part of, unfortunately, the uncertain environment that we're all living and operating in at the moment. In the case of Grace, myself and Alison, we're trying to bring as much certainty and surety as possible in these uncertain times. but there are some things that are even beyond our control, unfortunately. Yeah. So with that, I wanted to, first of all, thank Alison and Grace for sharing their wonderful insights during this presentation. We've covered a lot of territory, but in the same token, we've only scratched the surface of a lot of the detail that sits around all of these areas that we've discussed. I will be sharing information with everyone that's attended the event around the details that we've presented here today, as well as our respective contact details. And we do have a secure means to communicate with you, to analyse your personal circumstances in a secure and private environment, and to give you, importantly, customised advice and guidance around your next steps and your options, which are absolutely critical around the areas that we've discussed today. So thank you for attending today's session. And again, thank you to Alison and Grace.
Thank you, Mark.
Thanks, everyone.
Yeah, thank you.
Thank you. Bye-bye.
Bye.